to the BullHorn. It is not 2008, but you wouldn't know it from the way bank stocks have been performing lately. Brian Moynihan, the CEO of Bank of America, has become a 2011 version of Dick Fold from Lehman Brothers, it would appear.
Oh, no, you didn't.
I just dropped the Dick Fold on Josh Brown, the reform broker. Do you think that the rumors and all the speculation about BofA's fate,
Right.
are they grounded in reality, or is this really just a case of, investors panicking for no good reason?
It can be all of the above. Look, Bank of America has two major problems. Number one, it's a bank. Number two, it's of America. The company has become a proxy for everything that's wrong with the economy.
Right.
The jobs picture hasn't improved. Housing is actually getting worse, if you could even imagine that. So if you look at this issue facing all the banks, community banks, mega banks, and everything in between, it's almost like you picture the infestation of ghosts all over Manhattan, and then Bank of America being Sigourney Weaver's building, where Zool chooses to set up shop.
Are you a god?
There was no reason why we couldn't have taken something like a Bank of America or a Citigroup and done debtor in possession financing and just kind of cleaned that up the responsible way. Instead, we acted like to save the system, we needed to save each individual bank. 2 years later, we find out that we fixed nothing.
To be fair to the banks, it does seem like many of them have been more responsible after the crisis. The loan quality, when you look at credit trends, they're getting better. But the problem is they're still paying, rightfully so, for the sins of 2004 through 2008.
These are junkies smoking cigarettes in the basement of a church. They've already done all the damage, and now they're just hoping they don't relapse. Unfortunately, it's not up to them. When you look at some of the trends in housing, some of the trends in joblessness, this could almost be lethal to some banks. I'm not going to be too specific here.
Right.
The message to investors is, if the bank doesn't pay a dividend, it's not worth owning. Banking is supposed to be a boring business with a stable dividend. That's 100 years of history. That's the reason to own banks. If you're not getting that in a troubled bank, unless you're a real trader and you want to take advantage of things like what we're seeing in the XLF names, you can get dividends in non-cyclical kind of defensive companies that are 3%, 3.5%. Companies have more than enough capital to cover these dividends. They don't need to raise money. They don't need to argue with bloggers about their book value. There are so many better places to be. While there should be some kind of recovery in the bank stocks, because maybe things have gotten too negative, it's an area that you should just watch as a spectator.
Right. All right. Well, this is obviously very sad, very depressing, despite...
I'm okay.
Despite the Ghostbusters reference, which does liven it up, and to wrap it up there, I mean, to make this analogy complete, I'm going to go out on a limb and say we're going to have to say Ken Lewis is Slimer and Angelo Mazzillo is the Stay Puft Marshmallow Man?
Well, those guys are out of the picture.